The RBI had taken 3 banks out of its Prompt and Corrective Action framework in January 2019. This action was followed up with the announcement of capital infusion in a dozen banks. Let's do a 3-point analysis on the RBI's move and its implications. 1. Why are these banks out of the PCA? Well, in the past couple of years, we have seen that NBFCs have supported public sector banks in lending to small and medium firms. And the government wants this lending practice to continue. And so, the urgency to take banks out of the PCA may be due to the recent weaknesses in the NBFC space which was seen after the IL&FS crisis. These banks were put under the PCA due to bad loans, weak capital levels and low return on assets. They have not yet fared better on all of these counts, so it needs to be seen whether these banks can fill the void that was created by a weak NBFC sector. 2. What will be the impact on credit growth? RBI took these banks out of the PCA to ensure that they start lending again. But the share of these banks in the banking system's overall credit is only 10.3%. So unless they grow above the industry average, they are unlikely to move the needle very meaningfully. Although the fact that they have lost over 2% market share in less than 3 years can lead one to assume that they will recover very rapidly. Now, PCA banks can of course loosen their purse strings with fresh capital infusion, but given the disadvantage on incremental cost of funds, they will not be able to grab the best of assets. 3. Is the central bank adding to the risks? The capital infusion without reform and a hasty exclusion from the PCA can encourage lending to not so creditworthy borrowers, and it may lead to a rapid drawdown of the infused capital due to higher risk weights of such assets. So ultimately the question is whether the central bank should really add to these risks in the name of fostering credit growth.